rand has weakened to a 3-week low, pressured by a stronger dollar on expectations of prolonged aggressive interest rate hikes by the Federal Reserve to tame inflation. Petri Redelinghuys, trader and founder of Herenya Capital Advisors, is joining us now to talk about the latest moves from the markets. Petri, good to see you as always. Welcome. Give us a sense first of how the markets and the local currency in particular is looking today.
Good afternoon. Good afternoon. Sorry.
It's a Monday. We'll allow it.
It's a bad Monday too, man. Markets are not faring well, I think, is the right way to say this. Our top 40 index today down almost 2.4% at this stage. We saw a very poor session from the US on Friday night as well. The S&P 500, in fact, closing on the lows, which isn't something that happens very often. And that negative sentiment kind of spilled over into crypto markets over the weekend. So Bitcoin and Ethereum and the likes took a hammering. And this morning when markets opened, obviously, equity markets also really sort of getting drilled really hard this morning. So the the SA 40 or the top 40 index is down some 2.4%. The rand is about 1.3% weaker versus the dollar, so we're trading back above 16 rand, 16.05. So this risk off fear sentiment essentially spilling over and taking over markets today. And I think we're in for a relatively tough week, to be honest with you.
Just on the tough week sentiment, what is the latest as far as commodities are concerned? Is U.S. inflation still hampering sentiment there?
Well, essentially, we know that commodities tend to perform better than most other asset classes during periods of high inflation or increasing inflation cycles. So in theory, commodity prices should be somewhat robust. So if you look at, for example, the gold price, it's only down around 0.8%. As fear increases, gold is likely to rally. However, energy prices are down some 1.5% on Brent crude oil. So commodity prices are coming under pressure. When you have moments where the market is very strained, is what it is now, generally people tend to sell everything, right? Whether it's commodities or precious metals or even the sort of safe haven assets really get hammered in the very, very hard times. And that's what we're starting to see a little bit. So commodity prices are under a bit of pressure. They have had some backwind, and I suspect in coming months we'll continue to have a bit of a tailwind from the sort of re-emerging China theorem or thesis, if you will, where China is sort of starting to come back to a level of higher productivity after lots of lockdowns, and they are sort of running at full steam. A lot of Chinese factories are gearing up production to go back into sort of full production mode, which will be supportive of commodities. But given the greater macro environment, commodity prices might still be under pressure, just less pressure than other sectors of the economy.
Mm-hmm. Some news from Thungela Resources. They've published a trading statement that's out. One of the things that jumps out at you is that 44% jump in costs.
Yeah, so that's obviously inflation-driven also. Look, I mean, they obviously do, their earnings per share is significantly higher than it was a year ago, and that's obviously because, the coal price has gone up tremendously. However, sales volumes were down by some 4.5%, and a lot of this is on the back of, inconsistent rail availability and power outages and load shedding and all sorts of other things that South Africa has been hit with over the last year. So even though the commodity price is really high and they are making more profit off the back of that, volumes are down because they can't get as much of it to their end customers due to sort of logistical constraints and that type of thing. So that share price also coming under quite a bit of pressure today. It's down 8%. It has run really, really hard. What is interesting, though, is that they say that they will continue to stick to their sort of plan of paying out 30% of the earnings as a dividend. And earnings is up, I think, to something like 58 Rand from 3 Rand last year. So that's quite a big dividend. I think the market is now trying to find, well, at what point is the share fairly priced in order to justify, obviously there's a fairly chunky dividend that's on the way, but at what point is the share price right to match that dividend, if that makes sense? So a bit of a bad news in the sense that, sales volumes weren't quite what they anticipated. And they've had, numerous other challenges, like, as you mentioned, for example, input costs or operational costs going up quite a bit. So we're trying to figure out, what, market's kind of a bit disappointed by that. But I think in a few days or a few weeks, we'll probably see a recovery.
Just still with companies then, the infrastructure and mining services company, that's Avenge, is now saying that it's in advanced talks to sell off its steel business. Why are they doing that now?
Well, this was part of their 2018 strategy to streamline their business. Obviously, I think during the COVID period, a lot of that got derailed and delayed and so on. But this is in line with the strategy that they published a number of years ago, and they've now finally, I think, found a buyer for Trident Steel, and they'll be selling it at the 2022 value that they value it in their financials. Now, I'll admit offhand, I don't know what that value is, but the market seems to be quite excited about it, up almost 8% on the day, keeping in mind that the share was consolidated some time ago, where there was, I think, a 500 to 1 consolidation. So it was trading sort of, I think, 3 cents, 4 cents, 5 cents, and then it consolidated and went to like 30 rand. So it's trading now at 15 rand 65. So after that consolidation, it is actually still quite a bit down. I mean, from here at the pre-consolidation level, I think it sort of values that at about 3 cents a share, approximately. So it's been under quite a bit of pressure even since that consolidation. So the fact that they're starting to lighten up and getting rid of some of the assets that they, have flagged for disposal is potentially a good sign. But, 8% up on the day sounds great, but contextually it has a long way to go before it gets back to where it was, even just 3 or 4 years ago.
Petri Redelinghuys, good to chat to you as always. Thank you. Enjoy the rest of your afternoon.